This year's been unprecedented, certainly in my career. We're seeing things that haven't really happened in 10 years and shouldn't really happen. So the biggest issue we're seeing in markets at the moment is 100% driven by inflation. That's the real big standout. There's obviously a lot of other issues you can point your finger at, such as the war in Ukraine, but aside from that being an absolute tragedy from the human side of things, it's not what's driving markets at the moment, nor is it any possible issues or geopolitical risk in China that newspapers also like to point their finger at. It's 100% inflation. What markets need to see a path out of this is for some clear guidance on where inflation is heading, and as a result of that, where interest rates will head. Ultimately, and at the end of the day, interest rates are the main driver of returns in markets over time, and they have a lot of flow-on effects, but there's so many moving parts. What should happen to interest rates and what does happen to interest rates are probably two different things. The Federal Reserve and the central banks in Australia have a very difficult job trying to balance that, because it's also very important what they say, and what they say can have the effect of actually have the impact of an interest rate rise without having to actually raise it. So when you're looking at what the central banks are telling us, it's not necessarily what they are going to do, it's what they want to see happens in markets. They want the result. So where interest rates go is a mug's game, I think. But if I had to put a number on it, I think interest rates will continue to go up because we haven't seen inflation come off yet. If you looked at the last print, it was up again. But there's always a lag with these things, so I guess it's somewhat expected. There is a big gap between 9% and 2%. I would be very surprised to see inflation head materially higher, just because we are starting to see a lot of the components of inflation come off now, such as retail sales. They're all sitting on record inventories. You're starting to see some weakness in oil prices. Other things such as computing chips, which are components of most of the electronics that we buy. All cars these days, the computer chips are now coming back into stock, so that's going to be less of an issue. Seeing a lot of the supply chain issues resolve themselves, so I think we will see naturally inflation come back down, and that's not even really a result of interest rate rises. It's just a result of a lot of other things that are happening at the moment that are just unwinding. So no, I don't think we'll see it come down as quickly as we saw it go up, but it wouldn't surprise me to see inflation kind of normalise over the next 12 to 18 months.